What's up, everyone? So, I just made a video and I forgot to hit record. So, I'm gonna go back and restart this whole video. It was maybe like a 30-minute video. I don't know if I have the energy to go over it, everything I just did. But yeah, let's get straight into it because I don't have much talking right now. I'm pretty tired already, and yeah. But this video is gonna be about market structure. It's gonna be pretty simple. Market structure is the key to understanding how to trade. It's basically like your roadmap. Let's say you're driving a car and you're going on a road trip, okay? And you're going without GPS or without a map. There's no signs, there's no nothing. You're just driving and trying to figure out how to get there. Let's say you're in New York, you're trying to go all the way to Chicago. You have no GPS, you have no map, and there's no signs on the road telling you which direction you're going. You're definitely going to get lost. Okay? So, market structure is basically telling you in which direction the market is going. And this is going to be your number one friend. You always want to follow the trend. Yes, sometimes you could take trades that are against the trend, but those are high risk trades. And what you want on your side is to have the highest probability on your end because you want to protect your capital and make capital. Losing is an inevitable part of trading. It's like your expenses. If you look at it in a business, this is your expense, losing. But you want to try and minimize the amount of losses you take. And to do that, you need to take trades that go with the trend. And going with the trend means you have to understand the market structure and understanding how market moves. Okay? But like I said in my past video, the daily and the weekly is mainly to understand the direction of the trend. The 4 hour is more of a confirmation that the trend is going in that direction. And the lower time frames, like the 2 hour, 1 hour, and 30 minute, is my entry signals and to see if it's correlates with the bigger time frames. Sorry about that. I have two examples right here that I just drew out for you guys. And I'm going to explain what a bullish market is. Bullish market is over here, meaning that the market is going upwards. It's an upward trend, and it means that it consists of higher lows and higher highs. Over here on this side, we have a downward market, which is called a bearish market. Bearish means it's going down, and it consists of lower highs and lower lows. So let me draw it out. Let's consider a high high and a higher, a high low and a high high is here. And then in the other market, let's say here to here. So now we're going to focus on bullish market. Okay, so to understand bullish market, it can basically, like I said before, it means it's going upwards. This is your highest lowest point, and this is your highest point in that time. Everything you see from this point to the rest, pretend in that time that you're looking at the charts, you don't see it. Okay, so right now this is your higher low and this is your higher high. To get a new higher low and higher high, you want it to break above your higher high point, which would change the higher high. Now your higher high would be here, and your higher low would be here. Same thing, broke above. Now this is your higher high, this is your higher low. Then the same thing again, this is your higher low, broke above, high. You could only have a new higher high and a new higher low once it broke above or below the last structure point. Like, for example, all this in here, it does not mean shit. It does not mean nothing. I can't say it does not mean nothing, but as a market structure, as your trend, it does not mean nothing. Because look here, technically it broke under the last one. Some people could say it's bearish, but it's not bearish because it never broke out of the zone. And this is the zone we're in right now. Once it broke above, like this point, now we have a new higher high and a new higher low. But all this noise in between is just market moving. Market is always going to move. Look, exactly like this example here, right? And then after it just ended up shifting back bearish and whatever. But here, it's irrelevant. It just means that market is moving up and down in the same direction of the trend. But if you would end up like actually taking a trade, let's say you would have an area of interest over here, like I explained in my breakdown of my strategy. Okay, broke above. Oh, it's doing it a lot. Liquidity grabs. Then here you would have found an entry, because if you would have entered in all of these, you would have ended up hitting a loss. But whatever, that's a topic for another subject. So you understand, a bullish market consists of higher lows and higher highs, meaning that it's going upwards like a wave, up and down, up and down. Then a bearish market, like I said, is going downwards, and it consists of lower highs and lower lows. Lower highs is the lowest highest point here, and the lower low is here. Everything to here, you don't see it right now, okay? Then once it arrived here, this is your lower low. Market starts going up, 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 up. Oh, from here, this is like an area of interest zone, we'll say. From here, it starts going back down. Oh, now we have a new a new lower low, which would be here. And your lower high would be here, right? It's under the black point, the black drawing, but whatever. Then all this, like I explained in this section, does not mean nothing. Just market correcting itself, having that pullback, having that retracement to go back down to create a new lower low and a new lower high. The lower high will come first, obviously. And then here, obviously means nothing. It's pretty simple, right? Bearish means it's going downwards. Bullish means it's going upwards. Just think of it as... I don't really have an analogy. Let me try seeing versus bearish. Is there a picture that can make sense? There's nothing really that can make sense as an analogy. There's nothing for real, okay? But you just have to know that the bullish bulls is going upwards, bearish bears means it's going downwards, okay? Pretty simple. I'm gonna go down now to actual charts, actual candlesticks, so you guys can have a better visualization. But this is just to show you guys how market moves, and that you always want to follow the trend, okay? In this type of markets, you're looking for buys. Once it creates this, you're waiting for it to go in this zone, okay? This is not the best example because there's a lot, but let's say I have this, a few retracement, and then boom. When market is between this point and this point, you have your area of interest would be here, and then from your area of interest, you wait till you have your confirmations, entry signals, and all that. Place your stop loss under, and then boom, get your trade. Simple. So now, like I said, we'll go to some candlesticks so you guys could actually read it. Right now we're on the USD CAD pair, and I'm gonna show you guys how it works. So here, let's just say we're starting from this day, okay? Market is going upwards. This is just noise in between. So let me bring this. I don't personally use these pink lines anymore. I just have them there right now to show you guys how it works and to have a better visualization. But let's just get into it. Okay, look. So this would be your high low, and this would be your high high. Because right now, market is going upwards. It's not going downwards. Some people could consider this the high low. But why I consider this the high low is because this candlestick does not engulf it. Okay? We want the candlestick to engulf the previous one to count it as a new market structure. Okay? So then this is the high low, higher high. Go to the next point. When it broke above, oh, it broke above here. And then from here, this is your high low. And then next time would be all the way up here. Right? Let me bring it out a bit. Why I don't consider this one as a market structure is because market just went straight up from that point. Yes, you could kind of it engulf. It's sometimes in trading you have rules, and sometimes those rules don't always apply because market is always different. We have patterns and stuff, but market is always gonna have different. It's always gonna be different. And this right here, why I don't consider it, it engulfs this one, but it does not give a strong enough rejection to create a new high low. So I'm just considering this the zone right now. Okay. All this noise is in between, then I'll do nothing. Oh, here it broke above it though. So now this is your high low and high high. But right here it shifted already. It went back to bearish right away. Lower, lower high, lower low. Now wait, oh, another pullback, but it's in between the zone, so does not mean nothing. Oh, now it broke above. Market is back bullish. Higher low, higher high. Then we wait, we have that pullback. Market is here. Oh, it finally broke under. So this is the new lower high. And this is the higher low. The lower high. This is the lower high. This is the lower low. Why I don't consider this now is because market in this zone right here looks like it's just like stalling. This did not have a push where it's telling us, okay, it wants to go back up and then go down. It did not go down, then up, then down. It just went fume. Do you understand that visualization? How I just made it make sense? Market does not show that it wants to go up, and it does not show that it wants to go down. It's just stalling there for a few days. For literally 5 days. It stayed in the same position and then it had that push. This is most probably a zone where you would look for this. It would be a tough entry. Actually, it would be something like that. But whatever, that's another topic. Now we're just talking about market structure. So this would be my lower high and my lower low because this is just like market stalling. It did not create a new point, okay? An example I could show you guys, a trick is a snake trick. So the snake starts like this. I don't know what is, okay. Snake. That's the tongue of the snake, and this is a snake, right? Most times when you look at a picture of a snake, the snake is not straight going. It's all like curved, right? This is not a curve for me. Yes, on the lower time frames you're gonna have it, but this market is just showing me that it's going downwards. It's bearish. Never had that retracement to create a new lower high or lower low. So I'm just considering that. Now we continue. Market here is the same. So, oh, it came all the way back up here. Did it switch? No, because it never broke above this point. And a perfect example now that you see the whole market, why I don't consider this point is because if I would have considered this, okay, right here, then this would be the lower high, and this would be the lower low. And then from here, oh, I broke above, it would be bullish. And then I would end up looking for a buy at this entry point. But as you can see, a few days after, market just went down, and market did not show any momentum. Yes, it had this great pullback if you're looking at the downside, but why market did not go upwards is because this is not the market structure. The market structure is from here, showing you that market is bearish, in a bearish trend, that it still wants to go downwards to the downside. It might have all this noise here, but this is just where you find your pullback and your entry to go down. Because if you look, you could have taken a trade here, 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 even here. You would have been in a bit of drawdown at that entry point. Might have almost gotten stopped out, but look, you've been 1 to 2 perfectly. The perfect trade actually would have been to the next higher low. So it would be something like this. This would most probably be tighter. And then here like this. And basically out of 1 to 2. You feel me? Looking for following the trend. Yes, you look at the trend on the weekly, the daily, the 4 hour, and the lower time frames to understand where the market is moving, where what the direction of the market is going towards. So this is really important. Like, besides candlestick patterns, uh, psychology, risk management, everything you need with trading, this is like the first step you need to understand. Like, if you're not able to read market structure, it's going to be really difficult for you to understand where the market is going. Basically, you need to understand where the market is going to take a trade, or else you're trading in the blind, and you don't want to trade blindly because the market is not your friend. It's very mean, and it could take your money in a second. Okay, trust me on that. So from here, market is still bearish. Right here, it broke under, so it created a new lower high, a lower low, and a new lower high. Then here it broke again, lower high, lower low. Why I don't consider this one? Yes, there's 2 bullish candles, but it did not engulf this. So I'm just saying, okay, still bullish, whatever. Oh, but now it broke under. So now this to here would be my lower high. Same thing, etc. and so on and so forth. Continue, continue. Then here, market bearish. And as you can see, the direction of the trend of the market is bearish. So you want to take shorts in this market. There's a lot of opportunities where you could have bought in shorts. You're not gonna go and look, oh, okay, look, it's having a reversal, and then have a buy, do this and do that. Yes, technically you could kind of predict and kind of get a W like that, but that's called a counter trend trade. And the most important thing when you're trading is taking trades that are in your favor. This is why trading is not gambling, because when you gamble, the odds are not in your favor. It's you versus the dealer, and you don't know what's the next card or whatever game you're playing. Let's say it's a blackjack. The odds are in your favor if you have 19 against an 8 or against a 7, but you never know. Imagine he pulls out a 10, a 7, he has a 7 plus a 10, he's at 17, plus 2, he's at 19. It's break even, you just lost. This is why you want to trade with the trend, that you know where the direction of the trend is going. Like, look, an example over here on these trades that I took. Right here, market is bearish, right? Lower high, lower low. I ended up catching a trade here. Another one here. Another one here. Another one here. Then when market, because here, from here, boom, boom, from here, market had its reversal, broke above. Now market is bearish. I ended up missing out on this trade, but this trade could have easily been a 1 to 5, would have made easy at least 10 grand on this US, and I'm in Canada, so 10 grand US is like 15 G's, which is amazing. In how many days? 1, 2, 3, 4, 5. I would have been Gucci. So anyways, I hope you guys liked this video. If you guys have any comments or questions about market structure, you could comment down below. I'll try replying to them. And just leave a like, show some support, subscribe. Um, Let me just go over real quick. Market structure again, just so you guys remember. Bullish means that the market is going upwards. It consists of higher lows and higher highs. A bearish market means it's going downwards, consists of lower highs and lower lows. Okay? See you guys on Sunday for the Sunday swings, and we out. Peace.